Hey everybody, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to deep dive into the USDJPY, basically the US dollar, Japanese yen. And there's some very concerning signs that, again, the dollar may be on the verge of weakening significantly over the next 6-12 months against the yen. And that would imply potentially stimulus from the government or lower interest rates in the US versus in Japan, and ultimately a weakening dollar versus the yen. So let's dive into this chart now and take a look. This is your daily chart of the USD JPY. And the first thing that jumps out is this pattern right here. Let me draw it in for you guys so we can all follow along. Up, down, right? Up, down, and up here. And for those of us that know this, this is an M and an A pattern. And in technical analysis, this pattern generally resolves itself with a move to the downside. So again, MAs are bearish, WVs, okay, those usually resolve themselves to the upside. So WV, it's basically the inverse of the MA pattern. But anyways, the point being here, folks, is this pattern here is not good. Now, earlier on, it looked like a little bit of a head and shoulders, but it's not looking as much like a head and shoulders, which was also bearish. But suffice it to say, this could also be in the near term. What type of pattern formation would this be, right? So you have essentially the flagpole down, and then you have this pattern to the upside, right? So essentially a bear flag off of this. So again, almost every angle I take on this chart, guys, again, doesn't matter if I'm looking at shorter term like this or the bigger MA pattern or any of these other ones, but essentially they're all bearish for this chart. I'm having a hard time finding anything bullish on this USDJPY. And just to be clear again, if you're not really familiar with currencies, this would essentially signal, again, the dollar weakening against the yen. In other words, the amount of yen, which is what it shows in terms of dollars, would go down. All right. So, let's say you exchange a dollar. Right now, you can exchange a dollar for 147 yen approximately. But if that drops because the yen, let's say it goes to 120 or 100, you're only getting 100 yen for that dollar. So essentially, it's telling you that it is weakening significantly. All right. So we got the bearish flag pattern here, which again generally resolves itself to the downside. We got the MA pattern. And then really you could even go and take it one step further and say, okay, well, what is the setup here? I mean, what's the bigger pattern setup? And we have a very clear baseline here. Look at how every time the dollar yen comes down, it's finding support and bouncing. But notice this. Well, what is the difference between each of these bounces? And again, I could just tell you, and I will tell you, is that this is the first big move up, and it's the biggest. Smaller bounce, smaller bounce. This is what we essentially call in technical analysis a bouncy ball pattern. Think about a ball, right? So again, the first bounce you get in the ball is the biggest, less, smaller bounce. It's almost it really is the same pattern. And then eventually what happens, it rolls, it goes to a roll, and then it breaks down. Essentially, it hammers so much on the floor that it breaks through the floor. But literally, look at this. This is the exact setup that we are seeing here. And again, it is a bouncy ball pattern. And the idea here is that this is going to be the outcome of this dollar yen chart. Now, listen, is there a chance that it doesn't play out? Sure, because always remember, folks, everything in technical analysis is based on probability. So you never get 100%. There's no such thing as a 100% guarantee in trading, investing, and charting. But what we're doing here is we're looking at past history of thousands, tens of thousands of chart setups and saying, okay, when this pattern sets up and forms this is the result 70, 80% of the time. And that's what we have here with the dollar yen. So we don't know when the dollar yen is going to break down. My guess is in the next few months, but it should ultimately see that breakdown over those next few months. And then the question is, well, how low does it go, right? Let's flip back to the chart and start taking a look here. Well, the obvious thing would be right in this vicinity. I want to show you this. You take that high going back to 2015, and we have a very clear kind of zone here with technical levels, right? So you have this area here from 2015. And then notice how you got above it, came back to it, then went higher, then came back to it, and then again went higher and higher and higher. The idea being is that at some point, if we do come back there, that's going to be a major, I repeat, major level of technical support on the USDJPY. And so again, if you're projecting this out, the likely outcome here, the bouncy ball pattern breaks. Where is the breakdown level? Very clear right here at around 140 on the USDJPY. And if that, again, does break, then you have your downside target to about 127 to 125. All right, again, very interesting. And for me, at least, listen, whether you trade Forex or not, the key is understanding what this means. If the dollar weakens significantly against the yen, that means the U.S. economy is probably suffering. Again, Fed would be lowering rates, which generally pushes the dollar weaker against other currencies, potentially stimulus from the government, spending, stuff like that, or even higher deficits. And that all is kind of bad for the U.S. dollar versus the dollar or the yen. Okay, so I hope you've learned something here, guys. As always, I try to bring my A game, my alpha, my education for you so you can watch these videos and learn a little bit every day I do these videos. And then, as always, I say, if you're interested in stock alerts, basically all swing trades, options, commodities, or crypto, we have a service for swing trading those, giving out exact entries and exits at verifiedinvesting.com. So check it out, folks. And again, thank you so much for tuning in. I'll talk to you soon. Take care.